Hello and welcome to the InsTech London podcast. This is Matthew Grant, one of the partners at InsTech London. And in this episode, we're bringing to you the final set of discussions from our recent MGA event. MGA is the next frontier for Insurtech that we held in London on the 2nd of April. You'll hear in this episode from Evari, Laka, Zurich and Envelop. And if you're interested in actually learning a little bit more about MGAs and in particular what they are, you can find an article I wrote under my LinkedIn profile, Matthew Grant, which gives a bit more background to the slightly mysterious world of Insurtechs. If you want to find out more about what we did for the event, you can find us at www.instech.london.
So, Evari, what we've done is we've built technology which enables us to offer dynamic insurance policies. And when I say dynamic, they're policies which are flexible and can change as the insured's circumstances fluctuate or their needs change. We are an MGA, we're a Lloyd's cover holder, and we actually manufactured and we distribute insurance products to small businesses directly in Australia. But as you noted, we actually now are working with other carriers and MGAs and using the Evari platform to help power their business too.
Okay, and what brought you over here from Australia to the UK?
Not the weather, that's for sure. The market's obviously so much better here in terms of size, and we're also tackling other markets as well. So we're now working with MGAs in the US and people in Europe to offer our technology, and we're looking at what MGA presence makes sense for us from an Evari perspective in the UK too.
And so where's the main focus? Are you using the MGA to basically understand and prove the business model, but do you see the real growth coming from being the platform to offer to other MGAs, or are you sort of still driving hard on the MGA route?
Our business in Australia really serves as a test bed for us to be testing technology and really learning about how dynamic policies should work. And the user behaviour in terms of how people interact with those policies is quite important if we want to be able to offer products for that. I suppose our core IP really is in the technology. So we have a solution that we can offer out of the box to run your MGA, which we're doing. It's also modular, so we're working with carriers. They can get the advantage of the dynamic real-time pricing engine, the data connections, the underwriting rules, all of those kind of features that come through that.
There are quite a few organisations, we've heard from a few tonight, who are offering platforms. How do you distinguish yourself then when you're building this platform for organisations from other choices they may have?
Yeah, good question. There's a few things that our clients tell us and that we've learned. So one is the richness of the features in terms of the ability to do these dynamic policies which you can move in real time based on data and other inputs as to what changes. So real-time policies and convenient customer features. The other thing I think is really our knowledge of the insurance industry and our ability to help influence the product design. There's some of the things that really make a difference. And then thirdly, the speed to market. So at the moment we're in the order of a few weeks to be able to launch products. We're trying to get that down to days. Down to days.
Down to days. Okay.
So we're not there at the moment. We're in the weeks range, but later in the year we expect to be down to days to launch products, and that's important not just from when you're launching your first product, but actually you really want to be able to iterate on that product on an ongoing basis. So you need the ability to go in and change rates and portfolio adjustments and things over time. So that's a huge emphasis for our team at the moment.
So if you can launch products in days, are you finding partners to work with? Have they also got the ability to make decisions fast enough, or are you kind of racing ahead of them? And now the sort of choke point is decision making in your clients or in your carriers.
Yeah, so I guess we're trying to raise a bar from a technology perspective in terms of what's available. But what we find is in practice, you can only configure a product once you know what that looks like. So there's a cycle to work through with people in terms of what a product should be designed like, what the user experience will be, and the technology, we're just trying to make it easy. So it's just a tool that you use when you go through that process.
Okay, so easier, faster, dynamic pricing, route to market is kind of all the way you'd position yourselves.
Yeah, we really see that if you raise a bar in terms of the standard features you should get out of the box, it should be able to switch things on and off or connect it to data and have digital policies that change in line with the insurance, all of those things. and it should be easy to configure so you can put your effort in terms of designing a good product which meets the insured's needs.
Great. And actually, on the underwriting side, for the MGA business, how's that doing in terms of sort of access to the market and growth of the business?
Yeah, going well. So that particular one, our technology is channel agnostic, but for our MGA business, we're focusing on direct. And the secondary focus for us is on working with partners. So affinity brands who can use our APIs to offer products at point of sale. And that's really our focus, is on how we get that big volume distribution using the innovative products that we've built there.
Okay. And how long have you been offering that for?
We're about 18 months into our journey in terms of offering policies.
Great. Okay, Robert, thanks very much. So you've got time for a couple of questions.
If you're asked why someone would choose you over someone who isn't an MGA as well as technology provider, what's your response?
I think it comes down to our ability to understand the business. I mean, if you're trying to set up an MGA or an existing MGA looking to transform your business, we've walked that path already, so we have some suggestions, some solutions in terms of technology or processes that we can offer. And I think that sort of quasi-consulting role that we play in partnership with clients, I think, can be really powerful. And for us, the platform has to function. It has to be performant, have the right features. We have the ability to do that because we're learning every day through our MGA business as well.
Yeah, great models. You have sort of eat your own dog food, I think is what they call it in Silicon Valley. Okay, Robert, thank you very much.
Thank you.
Okay, Toby and Arslan, if you'd like to join me up here on the sofas, that'd be great. Toby, a lot of people know about Laka. I don't know if everyone really understands what you do, and I think the real test is someone can go home tonight and say, wow, I saw that guy Toby and he told me about what they're doing, it's great, and this is what they did. So just tell me, what do you do?
What we do essentially is we have introduced a cost-plus business model in the insurance world, and by that we mean no more premiums up front. We say it's kind of unfair that you have to pay premiums first for a service down the line. We say, let's flip it around, we pay out money first, have a happy customer, and only at the end of the month we send the customer a bill telling them, please, please, please pay me back my £3 I spent on all of you, and basically introducing credit risk where there's underwriting risk before. So cost-plus business model, the American Express of insurance, so to speak.
So just talk me through this. So I take out a policy with you for my bicycle. My bicycle gets stolen. I put a claim into Laka. What happens then?
So we are proud. We've built our whole tech platform in-house. So we do the onboarding, administration, and claims handling all with us. When there's a claim, we would look at that and pay out immediately. We have a bit of money sitting around from our partner Zurich. So we have a claims float at hand we can spend. We have claims authority for that as well. We are structured as an MGA, however, we are just using it as a vehicle. And we can pay out first, and at the end of the month, we get the money back from the customers on behalf, so to speak, Zurich, and we split the fees.
So you're kind of creating peer pressure for people not to abuse the system. And I think part of your distribution model is through bicycle clubs and cycling clubs, so you kind of create that group as well, is that right?
So I probably should have said that our first proof of concept has been cover for high-end bikes, so really the juicy ones are £1,000 onwards. The average policy value is roughly £5,500 by now. So those people are spending a lot of money on that, behaving very well, taking good care. It's an emotional asset for them. And with that, we have a very good touch point and communication with the customer. So that's the first starting point. We're moving on to other products as soon as later this year.
Awesome. Just tell me what was it about what Toby's doing that Zurich decided to back his business?
I think it was trying to approach insurance in a whole different way. So it wasn't necessarily about the tech or customer acquisition. It was about underwriting in a completely different way. So at the end of the day, the result, it's a digital mutual insurance company. And what we get to learn is, well, how do we incentivize those people to behave as best as they can when they're in the risk pool? How do we manage the customer journey of doing something like this? So for us, it wasn't about this is going to make us billions, or you know what I mean? This is something that I think should be the way most insurance should be operated in the future. So for us, it's about going on that journey with them. And
what kind of insights have you found? Any surprises in terms of people's behavior and how they how they claim and under this new model?
So I think the most interesting thing is that people want to be part of a group, especially in a formal group like cycling, for instance. One person sent us a message saying, when I got my bill from Laka at the end of the month, I felt I helped people like myself getting back on the saddle, literally. So there's this breaking down the anonymity in a risk pool, holding people accountable. The more claims you have, the more you pay, which is capped, by the way, through a stop loss also provided by Zurich. So the downside is limited, but we clearly tell if you behave better, you save money. It's on to you. If you claim less, it's not me making more profit, it's you saving money. And I think people like that message a lot.
And how, I mean, having seen this, are you either seeing other examples out there of other people doing this, and or do you have ideas where you could use this beyond just cyclists?
Oh, absolutely. I mean, we're under considerable pressure from Toby to expand the capacity and look at different lines of businesses that we're looking at now. I think also for someone like us, this has a lot of use cases internationally. So if we think outside the UK market, there's some really interesting places that Laka could go and prove this model and grow it even more.
But in cycling or into different lines of business?
I think it's the digital mutual insurance bit that's the real interesting. I think the bicycles is the first use case. It's not going to be the last one. I think Toby will say that before I do. But yeah, it's one of many to come.
Okay, and for the technology behind this, so what do you see as your strategic advantage in the technology that you use to be able to make you successful?
So I think the beauty is we don't have to integrate with Zurich, so it all sits with us. We have the full control. We even have claims authority, so we can provide an end-to-end service to the customer. We effectively have built our own policy administration system, we've built our own claims handling platform, and we send a monthly risk bordereau to Zurich and tell them what happened in hindsight, so to speak. So I think full control is really important. Customers expect that. I think putting a pretty face on a distribution strategy is a good starting point, but we really wanted to change the root cause of insurance. Why do people don't trust or like insurance? And we believe it's about incentivation, making money when you act against your customer. And it's a strong thing to say in this room, but realigning the interest in the insurance world is something as a core of the proposition.
And on that, I mean, the distribution, people are sort of quite conservative about how they buy. You know, they don't want to spend too much time on insurance. How do you sell it, and how do you explain to people that it's different, or do you just it's insurance and actually they don't really know what goes on other than the fact they pay slightly less? I mean, that's how do you get to shift that behavior in their buying habits? The
price is clearly important, right? So we need to be at least market, ideally better. And on average, customers have saved roughly 50% compared to market last year, which is a good starting point. But how do we sell this? So clearly we need the attention of the customer. It takes a minute. The first 6-9 months were dreadful for us trading because we had to find the right words. It's a bit peer-to-peer lending in the early days, a new proposition in the existing field. How do you overcome the sentiment that it's just another Me Too, basically, right? To tell them we are really different. It takes a second for them to understand. But once they are on board, they're really bought in. And for me, a Laka customer is not a cyclist. He would eventually buy more than one product from us. So upselling, cross-selling will be really important for us in 2019, 2020 and forward.
Fantastic. Okay, so just a couple of final questions for you, then we'll open it up for the audience. So, Sasan, what has been your experience of working with an organisation like this? You're very different to Zurich, going places. So if it's not challenging your organisation, then it's probably not doing some things right. You know, what have you learned from that whole experience?
I think in one word, it's probably uncomfortable, right? Because we get put in an uncomfortable space, which is good for the organisation. But in the lead up to this, I was thinking about what's the advice I would give to other insurers that do have these kinds of relationships. And I think the big one would be, I mean, we met before Laka was even called Laka. And I think we made the decision to back them on day one. And the rest of the time was me trying to sell it within Zurich to say, let's do this, right? Not just me, but a few of us. But I think the key thing is, as long as we're strategic, there's a lot of times when we cannot do what they want, or they cannot provide the KPIs that we need. So I think we need to be strategically and long-term, the alignment needs to come there, not in the next 3 months and the next 6 months and what are the sales or what are the loss ratios. It's about, right, Toby, where are you going in the next 5 years? And can we learn and can we help move our organization towards something like that while they do that and learn from them? And that's the ultimate goal.
Yeah, and I think what you said before is key. I mean, you see this clearly, you need to get revenue out of it. at some point, but for you it's a learning about how do you work with a different distribution model, a different way of paying claims. What's the advice for you for companies out there that have got a different and new model and just have to work with a Zurich or somebody else? If you could sum it up in like one thing you did that you felt made you successful, what would that be?
I think that's just one word: persistency. I think I had 28 people saying, fantastic idea, I will be your number 2, but let someone else figure out the paperwork. Aslan was a number 1 basically, and he wanted to see it through, so I'm not saying we're the 29th person in my list, but it took a while, right? So a lot of people gave me a yes, maybe, lukewarm responses. It's just about hitting the right person at the right level, at the right organization, and just staying in there.
Good. And Aslan's comment about he knew you when you had your previous name, was that his polite way of saying he convinced you to change it to a different name?
Not at all.
That's our secret.
That is our secret. Fair enough.
Right. Okay. Well, we've got time for some questions from the audience.
Hey, Toby. My question is for you. So just going back to when you were starting out and going out to look for some capacity, just looking back, was there any key learnings, things that you wish you had done better or things you wish someone had told you before?
Probably I should have tried to speak the language better of the traditional insurance world. I think that could have helped a little bit. Until we got to the point to call the instruments what we actually needed was a dreadful experience. Claims float and stop-loss arrangement, I think I call it just different. And I guess having a translator, an intermediary almost, a couple of helpful hands are super helpful for that.
Hi guys. Quick question around use cases. So obviously you're looking at things like cycling and other use cases internationally, globally. But are you looking to go into the SME space at all and look at commercial insurances for this type of product or scope?
Possibly, yes, but I think we deliberately choose a very small use case to convince the regulator, insurance partners, customers. The risk, if we have 5 bikes more stolen, might be 20K. The risk is significantly higher with SME insurance, right? So I guess we've built a lot of goodwill over the last 18 months or so there might be use cases beyond that and even bigger tickets. Time will tell. We need to find the right distribution angle. We really like cycling because we can speed and meet the customer in their natural habitat. Acquisition costs much lower than trying to sell dental insurance on Google. So we'll see where it leads us to. We have a couple of ideas, and I think in Q3 we're going to do something together again.
Excellent. Okay, Toby, Aslan, thank you very much for joining us. I know you've got a lot going on, so appreciate you being here. Okay, last up before the shout-outs is Jonathan and Paul from Envelop Re. So let's talk a bit about what the business is anyway. So talk to us a bit about what you're offering now with...
So at the moment we're underwriting cyber reinsurance, and I think we've become one of the largest players in that market, partnering with MSAmlin. We launched that just at the end of last year, and already I think we're approaching something like 40 million in premiums. So we've exceeded our expectations. We are backed by AI and an augmented intelligence approach, so we are a little bit differentiated from some of our competitors, and Paul here has been closely involved in developing that. And at the moment we're just concentrating on cyber, and we will begin to sort of diffuse some of our reinsurance capability into primary insurance markets as well.
Okay, so just make sure I understand. So you're a reinsurance MGA, you're backed by MSAmlin, so essentially you're an alternative route to the market for MSAmlin as opposed to their cyber team providing reinsurance into insurers directly. Is that right?
Yeah, so I guess when we started the company, we started with a very simple premise, which is that the first thing that you need to do before you start insuring or reinsuring anything is take the time to make sure that you really understand the risk. And we were really attracted to cyber. I come from an aerospace and defense background. I was doing a lot of work with the U.S. military, intelligence, NASA. We saw the opportunity that there were a number of emerging risks out there. Descartes was speaking to one in weather, and I love the way that he put it, where you have to model it like a physical system. You can't just build a statistical model. And that was the background of our team around using machine learning and using complex data sets and different types of simulation modeling to get your head around what is this system and how can we start to predict it. And so the reason that we didn't like saying that we were an MGA up front or that we were intending to be an MGA is that was a little bit more incidental to what our core strategy was. And our core strategy was to understand the risk and then find the best way to use that understanding to enable the market. And when you do that, you can find business models that really grow and that really scale. So we spent a couple of years building that model. We initially went to market in partnership with MSAmlin underwriting reinsurance.
So you are underwriting insurance companies? Those are your clients? Or are you going beyond that?
For the moment, just
insurance.
A reinsurance vertical.
So
our clients are all insurance companies, which is why you don't see our brand emblazoned on the side of buses or anything like that.
Are you finding you can get enough information from your insurance clients to be able to assess the risk in a credible way, given that cyber is hard enough to understand and price if you're actually dealing directly with the end enterprise?
Yeah, for sure. So we do get data from our clients that are insurers, but that is not a huge component of the data that we're analyzing. So one of the paradoxes about cyber risk is that you hear all the time, how do you analyze it, because there's not enough data to analyze it, and that's true given a certain assumption about what type of data you would be looking for if you were going to build a statistical or an actuarial model. And the reason that it's a paradox is that I can't think of any other area in the world where there's actually more data available if you want to study it and try to understand the dynamics, because it's inherently digital, and so you can get behavioral information on any number of pieces of the ecosystem, and you can begin to understand how those speak together. Certainly a lot of that data is difficult to get. Certainly some of it's expensive. There's certainly some holes that you know that you can't get. But that's the core of the system. The data that we get from insurers, we assume that we get no information about those companies in themselves. We're able to collect and analyze a lot of that data autonomously. We do it all the time. And we're able to, as we get a bordereau, just effectively re-underwrite every single company in that bordereau and then stack them together and see what the correlations look like.
Great. And Paul, your background and, again, some advice for people with a sort of technology orientation who want to get into insurance or a new business area?
It's much more important to get the market fit right than it is to get the technology right. And so back when I was doing aerospace and defense stuff, it seemed like most of my job was just listening to engineers and listening to their absolute genius idea that no one would ever give them the least amount of money to build, and that no one would ever buy if it existed. And so if you are a technology person, you have to overcome your ability to look really deeply and see what's possible, and you need to consider what the user needs are. It's kind of a nice sign of the maturity of this industry that almost everyone up here has said that almost exact thing, that it's about product market fit. It's about listening to the users. But yeah, and then from the technology person perspective, the other thing is that what users want is often just incredibly disappointing. You may want to build this incredible system that does something so complex that you just figured out how to do, and you think maybe you're the first person in the world that's ever figured out how to do it. But what they want is a button that turns their screen from, blue to a different color blue sometimes, right?
But the customer is always right.
Yeah.
Good. So questions for Paul and Jonathan?
How do you stay abreast, in cyber terms of the threat environment, and how does that impact how you think about reinsurance?
There's certain data that we use that is incredibly valuable, but it's not necessarily time sensitive in terms of when we get it. And there's other data that is very, has a very low temporal resolution, but we can't necessarily interpret it holistically. So we have different modules in our system. We spend a lot of time figuring out how to weight the historical data that we have appropriately. Do you completely throw out 5 years ago, or do you weight it 10%? Do you look back 6 months, or do you look back a year? Obviously, the answer is you weight it somehow. And then we have different predictive methods that we follow to take more cutting-edge data that we get from data feeds and that we get from experts to kind of tune pieces of our model to say, this particular threat factor is increasing, or this vulnerability is going to have this effect. And that then propagates throughout the model.
Great. Okay, thanks. Paul, Jonathan, thank you very much.